So now we're going to move on to our presentation. Jordan, do you want to take it from here and introduce yourselves, Jordan and Jennifer?
Yeah, absolutely. Thank you, Emma, and everybody for joining us today. This got put together pretty quickly, so don't expect much, but just kidding. This is actually, I think our, I don't even know, 16th, 17th webinar on PPP. So as they keep changing the rules every day, we keep learning and keep presenting different things. So how this kind of came back about, just real quickly for everybody's background to make sure they're tuned into the right program, is Trinity Bradley Anderson, a tax partner of ours, is also on the chamber board. And I believe she was having a discussion with somebody about, and this gets kind of nuanced in how you describe it, but in essence, the PPP loan can be 100% forgiven. But the trade-off currently that we have right now that we'll talk about is you lose some of your business deductions. So for a simple mind like mine, it's simpler to look at the loan kind of being taxable, although that's not technically correct. It is, the loan's tax-free, but you lose some deductions. So I think that caught a few people by surprise. And so we just thought we would join you today and kind of go over that and answer some questions. We actually have a webinar on not so much this topic, but which type of forgiveness application should you choose? And so we're going to do a sneak peek as well of that with Jennifer Carter from my office in this meeting if you haven't already started that process. So Brooke, if you don't mind going to the next slide, please, I will take it from here. So yes, today, usually I don't have to do the marketing part, but I am doing it real quick. So the overview of Stockman Kast Ryan Company is we are a local firm based in Colorado Springs, been around for 25 years. This is actually our 25th anniversary. And we have been deeply involved with the PPP loan program from the beginning. And so we're just trying to bring resources to the community to discuss those issues. So next slide, please, Brooke. Again, today you have me. I wish you could have Trinity instead, but you have me, and then luckily you have Jennifer Carter to help out as well. So next slide, please. Oh boy, a lot of marketing stuff. So yes, here you go, full of items that we can go through. So next slide, please. Full service accounting firm located in the, right across from the library and downtown off Bijou. So been there, I think, in that building for 25 years, haven't fully been there. Heavily involved in the community, different aspects, and we can pretty much help with anything you ever need. And that's kind of the spiel there. Next slide, please. Next slide, please, Brooke. So just to kind of recap, I think this is kind of helpful because we've had a lot of changes. And I think most people, if they've been following these items, are already aware of them. But, in case you were doing something else during COVID and you didn't hear about some of this, then we'll just go over it real quickly. With the Flexibility Act that got passed, and this impacts a lot of the forgiveness timeframe as well, and the people we think will actually be able to gain forgiveness, they made it a lot more favorable for taxpayers, basically. So if for some reason you don't get full forgiveness, you can pay the loan back in 5 years instead of 2. The huge change was the period we measure to see what we get forgiveness on grew from 8 weeks to 24 weeks. And with that, we expect, unless a business had a significant shutdown or reduction of activities, most people will be able to get full forgiveness with that additional going to 24 weeks. So they also, in number 3 here in this column, there's all sorts of exceptions now, safe harbors related to employee counts, things that you can look at to potentially reduce the amount that you would lose on forgiveness. So lots of outs, I'll say in a simple manner, that you should evaluate if you have a reduction in pay or a reduction in headcount. Then the next one, which also was massive, is there used to be a 75% payroll component for forgiveness. They dropped that to 25, with the other bucket mainly being rent and utilities. And the last one was just some changes that they made in this bill as well to employer taxes. So that's all for this slide. And then we'll kind of get into the meat of what kind of spurred this meeting. We can maybe have some questions as well at the end. So next slide, please, Brooke. So I just want to stop here and everybody think that if you've been on this roller coaster for a while or you're fairly familiar with it, it changes constantly. Guidance comes out after the initial rules are coming out. So the meat of what we're looking here today, and I believe it came out in July or June, don't quote me on that, but the IRS came out and they basically said this concept where, yeah, your loan can be 100% forgiven, but you will lose those expenses that you had to incur to get forgiveness. So that sounds kind of backwards, but basically you're going to be paying more tax because you're going to lose some of those deductions. If you kind of think about it this way, if I got a $100,000 loan and in my 24 weeks, I spend $100,000 on wages and I have no other restrictions, so I'm 100% eligible for forgiveness, that $100,000 of wages that I spent to get there, I'm going to lose. So if my normal wage expense is $500,000 on my tax return, I'm only going to get to use $400,000. So business wise though, it's always better to have a dollar and pay, 35 cents on that dollar or whatever your tax rate is, 25 cents. So still worthwhile, but not as good as we thought or as the bill was actually written. I actually read the CARES bill, well, at least the PPP section. I can't admit that I read the whole bill, but I did read the PPP section multiple times. And there's nothing in there about losing deductions. So this is IRS interpretation. I would put a decent amount of money on that someone will take this to court. I have no idea what the outcome of that will be. And Congress could change this every day. And we'll talk about later. So our lobby group, the AICPA, has already put together a bill. They've lobbied to get these deductions in place. Just if you think about the political kind of landscape of looking at COVID, who's really going to want to stick this extra tax bill to the taxpayer? That might be a hard political pill to swallow. But anyways, so this is where if you had to come to us today and say, what is the rule? That is the rule. And that's kind of the purpose of why we had this meeting today, is maybe that's not as well known. But again, that's been around since July or so. I can't remember which webinar we did that in. I think somewhere in the middle, number 9 or 10. So that is something you have to think about. So we're going to take it just a little further, further down the election, because we can look at timing of when you apply and impact of that. But this is just the bigger part that we kind of wanted to communicate is currently you lose those tax deductions that you would normally have under this IRS notice 2020-32. Next slide, please, Brett. So again, what are we waiting for? Well, really what we've been waiting for with this whole thing is for Congress to make up their mind explicitly. If you've been following the news, we could get automatic forgiveness for, $150,000 has been thrown out a lot. We've also seen up to $2 million if and what that means, instead of going through this rigorous application, which Jennifer will describe, and that we've worked on it quite a bit and spending all that time, maybe it's as simple as a certification. I use this money on eligible expenses. I needed this money to stay in business. Please forgive my money. One thing to remember here that we'll kind of talk about a little bit later as well is the SBA has said that they will not audit loans under 2 million, but they will audit all loans over 2 million. So take that however you want to interpret it, but it does seem like if they're not even going to look at it, and they are going after people for fraud, that's been in the news. And if you're under $2 million, but if you really use this for your business in a legitimate way, it seems like they're just trying to make forgiveness easier on you. And that seems to be the trend, but they constantly release new rules. So we are waiting for Congress as well. A lot of the banks out there are, I'd say in the last, I don't know, maybe 2 weeks, 3 weeks, a lot of them have started to maybe open their application process. But for a while, nobody was even opening, even though the SBA allowed it on August 10th, I believe. So next slide, please. So kind of the thing to think about here, if we're going to add a little bit of proactive thinking, is when do you want to apply? And we kind of, my strategy before was and I kind of walked through it, is well, maybe if this year was actually okay, or close to okay, but we're a little bit worried maybe about 2021 and the impact of COVID then, maybe we want that income to be in 2021. And that, that's kind of what we do, is kind of do some planning. So we're still thinking through that, although the next slide that we got a couple weeks ago didn't really help with that understanding as well. And we'll walk through the examples, but when to apply, I think is still a relevant question, because under this current law that we talked about, you may have some ability to time when you lose those deductions, i.e. when you'll have more taxable income. So there's a bill that was introduced in May of 2020 that it did pass the House, and it basically said that there would be full deductions for this, so we kind of get to have the best of both worlds, you know, forgiveness of the loan and the tax deductions. So I don't think we've seen the end of that story, but we did want to tell people what the current guidance was as of today. Next slide, please, Brooke. So we're part of BDO. BDO is the fifth or sixth largest firm in the world, and we're not part of their firm, but we are a member, so we can get access to their kind of like thought leadership. And they kind of put out something that that we kind of found pretty interesting on this, and it kind of changed my viewpoint. Again, nobody has the exact answer on this, but we can just, what I try to tell my clients when we're doing planning is, let's kind of plan for the conservative approach first, and then maybe if there's a best case, fantastic. But at least we know the scenarios that we're looking at. So the first example here is kind of straightforward. You know, we get the loan proceeds from PPP in 2020. We spend all of our money that we need to in the 24 weeks in 2020. And guess what? Somehow magically, the SBA approves our loan forgiveness in 2020. That one's kind of cut and dry. Everything happened in 2020. If Congress doesn't change anything, you're going to lose those deductions and have more taxable income in 2020. The next one is, well, what if I kind of wait on my application, and what if I wait there and say, well, I'm not going to apply until 2021, because technically you have 10 months after your 24-week period to apply. And I think you actually have a longer time period, but I think it's 10 months before they start kicking in interest on your loan. What if I'm going to wait till 2021 to push that off? What BDO is saying kind of was the big change there is they actually think that you would still lose those deductions even though you didn't apply and get forgiveness until 2021, because you incurred the expenses in 2020, and that's when those expenses were no longer deductible. And the concept that the IRS borrowed that's kind of important is, if you think about like muni bonds or anything that's tax exempt in nature, there is a tax provision out there that says if you incur a cost that's related to tax exempt income, that cost is not deductible. And that's kind of the theory that the IRS is operating on, and that's been around, I don't even know when, the 60s or something, quite a long time. So established theory, again, that was not in the CARES Act bill, so I could see this being litigated. But that's kind of the second bullet point there. There's still not, at least according to this thought process, is not a good angle there. The one that they do have some leeway in is, if your loan is over $2 million, you are going to be subject to that SBA audit requirement. Who knows when they will get around to that? I mean, I think the stat I heard is they do somewhere between 4,000 and 5,000 loans on a normal year. And I think they did over 5 million PPP loans. So, anybody has a business that knows that difference, those numbers are kind of insane on how they're going to look at this. But they may audit you at some point. And because you could lose some forgiveness, there's some potential that some of the deductions might be enabled to be kept in 2020. And that's a kind of a unique analysis that you'd want to walk through with your tax advisor, just to make sure if you're in that situation with over $2 million, because of the audit requirements, we always recommend that you just scrutinize that just a little bit more. So I'll leave, we go to the next slide, please, Brooke, but I'll leave kind of just a couple thoughts here. So, BDO, kind of most people are audited accrual basis. If people are familiar with like accounting methods, there's a cash method, and a lot of small businesses, a lot of our clients try to use the cash method. And typically if your gross receipts are under, keeps changing, but 26 million roughly for the prior 3 years, you can use the cash method. And if I think about it from my perspective, this is just Jordan's thoughts, cash method, if you haven't received that forgiveness of the loan from the SBA and then your bank, I think you could have an argument that you maybe could take the deductions in 2020. But that's just a thought process there. We've had these slides for a little bit coming up for our upcoming one. So what about if there's higher tax rates in 2021? you know, I don't think we know much from the election date on that yet, but it looks like maybe the Senate won't change. And we don't know yet on the presidential part, but higher tax rates, they're probably going to be the same if we have a split government. That's probably everybody's kind of thought. So maybe not as relevant anymore, but if you had a full administration change, you might thought about considering pulling it into 2020 anyways. And then the last thing is, like, you know, we kind of tell some clients, do you really want to go through this brain damage of this application if they're going to come out and say, hey, guess what? You get free forgiveness, which is always on the table, but we've been waiting and waiting and waiting and waiting for that. So again, I'm happy to take questions real quick before I think we go to Jennifer's part, or we can do it all at the end if that's easier. But it was brought to our attention that maybe this is something we should share with the chamber. So.
Okay, if there's not any questions, I'll kind of move along. So I'm going to talk just a little bit briefly about the different type of loan forgiveness applications and like which form might be the best one for you to use. You can go ahead and go to the next slide. So there are 3 applications. We'll start off with the original SBA form, the 3508. It's the full application for loan forgiveness. And then after that, they came out with the 3508 EZ, which had some lesser requirements. And then most recently, they came out with the 3508S, which has the most minimal amount of requirements for loan forgiveness. So let me move this real quick. One thing that people worry about is that the application has an expiration date of 10/31/2020 in the upper right. That doesn't mean you have to apply by then. Obviously, that would have been an issue since that was a couple days ago. But that's just a date that's on there. It's not when you have to apply. You have either the 2 to 5 years for your loan origination to apply. But like Jordan was mentioning, within 10 months is when the payments start becoming due. You can go to the next slide. So looking at the different forms, which one might apply to you? People want to know if I am a sole proprietor, independent contractor, or there's no employees, which form? Do you need to go through that whole long 3508 form? And you don't. If you don't have any employees and you don't have employee salaries, then you can just fill out the 3508 EZ. And the part about that is that you don't have to go through the hassle of filling out the Schedule A, the Schedule 1, the Schedule 2 to kind of show how much salaries. Did you reduce those salaries? Did you still have the same number of employees? Did you reduce your employees? You can just go ahead and put your costs on here on the 3508 EZ. You can go to the next one. Next slide, sorry. All right, so you don't necessarily, that's not the only requirement for the 3508 EZ. So the easiest one is obviously if you're self-employed and have no employees, then you can use it. The other option is if you can show that you didn't reduce the salary or hourly wages by more than 25% during your covered period. And if you didn't reduce either the number of employees or the average hours. So basically you can show that you operated with the same number of people. You didn't fire anyone and not rehire. You didn't have the same number of people but cut their hours so they were working less hours. As long as you can show that you were still operating at the same level as you were in the first quarter of the year, then you can use the form. And then the last option is basically showing you didn't reduce, again, the salary or hourly wages. And that you were unable to operate during the covered period at the same level of business as before February 15th, 2020, due to the compliance with requirements established or guidance issued between March 1st and the end of the year. You can go on to the next slide. All right, and then the most recent form that has come out is the most simplified, the 3508S. And then the borrower can only use this if their PPP loan amount was less than $50,000, but also if any affiliates and their loans along with the borrower exceed $2 million, then you can't use the form. So as long as your loan was less than $50,000, you can use this one. The good part about this one is that you don't have to worry about your FTE reduction. You don't have to prove that you had not reduced your number of employees. You don't have to show that you had reduced the amount of salary or their wages. They don't care about that on here. we had hoped that there would be just automatic forgiveness, and even this isn't automatic forgiveness. You still have to provide your documentation for the expenses you are showing. So say you're just doing salary, you'd still need to show your payroll reports. You still need to be able to have that documentation. You just don't have to go through the extra hassle of the extra calculations. Go to the next slide. And then the main form, the 3508, this one you basically have to do everything. You have to do a bunch of calculations to show that your full-time equivalency didn't go down. If it did, you would have to do some reductions. Same thing with the wages, salary. So this one's much more time consuming. It requires a lot more documentation. There's a lot more going on in this one. Go ahead and go to the next slide. And then documentation for submission with the application is going to be pretty much just dependent on which form you're using and then what kind of expenses. Pretty much with all of the forms, you'll probably be putting in payroll, because if you don't, you're not going to get anything forgiven. So for the payroll, you're going to either show bank account statements, tax forms, your 941 form, your payroll reporting forms. And if you're going to be using employee contributions and health insurance, retirement plans, you would want to make sure that you have documentation for those. We can go on to the next slide. Full-time equivalents. So if you're using the EZ, you still want to be able to show that you have not reduced. So you can look at your payroll per month for the employees. There's different look back periods. So you would need to look at the different options, February 15th, 2019 to June 30th, or alternatively, January 1st through February 29th. And then there's seasonal employees that have an option for a 12-week period between May and September. And then you're just going to have to show all those documentations in the payroll tax filings. Go on to the next slide. And then from there, a lot of the, because of the increased 24-week period, most people are able to show that they made enough expenses just through payroll, because you have to meet at least 60%. Most people can cover their entire loan amount with payroll. So that they've also come up with guidance recently showing that there's no need to over complicate it, put more expenses than you need. So as long as you can get to that full forgiveness amount, just put those. So a lot of people aren't even needing to increase their amounts with the non-payroll items. But if you did and you had mortgage interest, you had your rent, you had your utility payments, you'd want documentation for all of those expenses as well. Good, next slide. Okay, and then obviously some documents you don't necessarily have to submit with your loan, but you do want to make sure that you have those in case you were to get audited. You know, they're going to ask you for the documentation showing how you filled out your Table 1. So that would be through your PPP Schedule A worksheet, gives you your Table 1, your Table 2, your FTE reduction, and then any other documentations for how you obtained your loan, the original application, certificates of eligibility, etc. And obviously retain all your documents for 6 years after the date. And I think that's all we've got. We can go to the next slide. Okay, yeah. Jordan, I don't know if you wanted to pop back in and then we can see if there was any questions after.
Yeah, we know you guys, go for it. Go ahead, Derek.
Hey, Jordan. So I had a question concerning food and beverage industry. So kind of a two-part question. The first one is with like the utility tax credit, will that still be applicable if you use a portion of this towards your utility payments? Do you know?
I don't know of that answer. We could look into it and get back to you, but I'm not aware of that question off the top of my head. Jennifer, you know anything either with that one, but yep, don't know that one off the top of my head. Although, like I said, there's thousands of pages of guidance right now, so there would be something we'd have to go look at. Like, and they apply to unique industries in unique ways, I'll say sometimes.
Well, and that would be more related to Colorado, obviously, also. And then the second question is, you know, in the food and beverage industry, again, you know, typically in the total payroll, you're going to look at, you know, tipped aspects to it as well. You know, if tips aren't coming in, you know, those still are counted as payroll. You know, is that going to be super detrimental to restaurants when, you know, their total payroll is going to be 40% of what it normally would be because there's not going to be those tips aspects?
Yeah, I mean, you hope that the switching from, you know, when we applied, it was a 2.5 month look back versus the 12 weeks. You hope you could overcome that. You also want to investigate any of those state ordered mandates, which gets a little bit, people have different interpretations on that, but some of those reductions were maybe, let's just say this, there's a lot of ways out of losing forgiveness and you should explore all of them if you're in that situation. So yes, if tips have declined drastically, and so your compensation levels don't look like you're hitting full forgiveness, there's a few ways to get out of losing forgiveness that I would suggest you explore.
Okay. And is that something that I could, you know, refer some of my clients to you guys to help with on that kind of thing?
Yeah, absolutely. Because what we really want to look at is, and one thing we maybe should have mentioned too, is there's different measurement periods and you get options for those. And we talked about these in other webinars as well. But like the EZ application, Jennifer, correct me if I'm wrong, but I think the measurement period you look for is the first quarter of 2020. But if you use regular application, there's like a period in February through June of 19, I believe, and then January through February of 2020. And what you want to do is just kind of look at which one gives me the best result. And so there's some strategy going into which one do you pick, because you're not required, to my knowledge, to use any application. So let's just say our loan was, you know, we could do the easy application, but we don't want to use that measurement period. Well, then why not use the other one? So what we're seeing mostly is people can get close to full forgiveness with some of these exceptions that they provided when state mandate shutdowns and things like that. But you gotta explore what option you have. So yes, absolutely, you could send it to us. That's what this slide says here too. So
okay, and so are you saying that you can, even if you used a certain look back period for the application, you can use a different look back period for the forgiveness application?
Yeah, there's these measurement periods that you have to compare to. So the easy one I think was brand new to me, but they literally look at January through March, I believe. And yeah, there's measurement periods of oh man, the loan is kind of like, now you're getting me crazy. Now I can't even remember. That was like a different world. It feels like how we measure the loan, but I know it was 2.5 months. But yes, for forgiveness comparison period of employees. So a simple example is, you know, a growing business, if you look at their like February of 19 compared to their June of 19 headcount, and they're growing. So by January of 2020 through February, they have a lot more employees. You're going to want to use that 19 one because it's a lower number. So you're always going to want to compare to the lower number. So that's kind of what I suggest there.
Okay, good. Thank you.
I have a question.
Yeah.
When are people typically, I guess maybe I missed it. When are people typically getting ready to apply for forgiveness? Are there banks that are accepting forgiveness? Should we have a plan in place as to when we actually, I mean, I know that 20 versus 2021, but
yeah,
are they doing it now?
Yeah, that's the most basic question, because we were getting people like a little bit over anxious, like, hey, let's start applying. We're like, is your bank accepting it? And they're like, no. So we were kind of like, well, if your bank's not accepting it. So what we've started to see, and I've heard in the news, is banks are selectively asking some people. Smaller banks opened up first because they want these loans off their books. So some of the larger banks were actually selectively asking people to start applying. I think on their side of things too, if Congress did come out with a simplified method, they don't want to do all this paperwork either if there's going to be a change. So a lot of it's waiting. But the first step would be, is your bank accepting it? You can ask that today. If they are, then you have a choice, even though they might send you 85 emails saying apply, apply, apply. You got that 10-month window like we talked about as well. So then it comes down to the business side of when do you want to do it? But we are starting, I'll say, I mean, Jennifer probably said in the last couple of weeks, our client base seems to be suddenly a little bit more active in starting to apply.
Yeah, we've definitely had some more, and I'd say as you said, the banks want to get off their books. I think the clients do too. A lot of people
Yeah, that's the other. One thing too, I just mentioned real quick to everybody think about, and I make how we do this, but if this gets litigated and you have to file an amended return, so let's say we do it right, we lose those deductions, you always want to keep in your mind if the case comes through that overturns the IRS ruling, you want to be able to amend. So pay attention to statute of limitations. How long can I amend to get a refund? Things like that, because, I don't think we've heard the end of this at all. And so we'll see how it goes. So. And if there were no more questions, I believe Emma had a group meeting for you guys. So we don't want to monopolize your time, but thanks for listening to us. Like I said, I do think we have another webinar coming up on more on the application process side of it in a couple weeks. But that was all. So thank you guys for joining us today, or letting us join you guys, I guess, instead. So.